So now let's see about the next topic, working capital management. So we all know that the meaning of working capital is, see in the name itself, this is a working capital. That is the capital which works for the company on a day-to-day basis. That is the capital which is required for the company on a daily basis. For example, once if the company starts, there may be many fixed investments. For example, buying a land, building, machineries, all these things will be one-time investments. Whereas to run the company on a daily basis, they require money for purchasing the raw material, and they need to depend on the debtors. What do you call this for what do you call this for giving the credit? That is the customers. So in order to attract the customers, credit period will be given so that the company need to get back the amount from the debtors. Then they need to get what do you call as credit period from the supplier. That is the creditors. So all these things plays a major role as far as company's point of view. So this working capital is very, very important as far as the company is concerned. Why? Because that is the life of the particular organization. Because the production, the company requires raw material that has to be purchased. For that, the cash, the short-term finance has to be arranged. Then once the raw material is purchased, it has to be converted into the finished goods, and the finished goods has to be sold to the customers. There are two type of customers will be there in a company. One is called as a credit customers, and another one called as a what do you call as the cash customers. So the company can sell it to, like, for example, this is the working capital cycle. Cash converted into raw material converted into finished goods or semi-finished goods in some product, then the finished goods, then they can, what do you call it as, sell it to the customers. That is the cash customer or credit customers. Then again, from them, the cash has to be retrieved and again the cash. So this is a cycle. So this, how many times the particular company what do you call as converts this cycle in a successful manner, that company plays like will be very competitive in the market. Their profitable position will be very high. This is called the working capital turnover. Like the cash will be turned, converted into raw material, then finished goods, then what do you call it, then from the customers it has to be retrieved back. So the here it involves all the components. You can see here cash management is nothing but involving, that is managing the cash. Then this raw material, semi-finished goods and finished goods. So buying the raw material and storing it in the proper place by using what do you call as LIFO, FIFO models. Then finished goods, it has to reach the customers on time, and again the different techniques of inventory has to be followed. Like they or in case of raw material, they have to follow ABC analysis, VED analysis. Then in case of finished goods, then there is LIFO, FIFO model again, last in first out or first in first out. They have to use those techniques or just in time JIT. All these things they have to use in the inventory management so that they should not get any damage in the inventory, as well as they should not get stagnated in the company. Then these finished goods, they can be sold to the customers. As I did, cash customers, there won't be any problem. So giving the cash and buying the product is of no what do you call as no issues in the company. Whereas credit, that is credit, the debtors we call it as. So from the once if given or like the products to the debtors, they will be paying after 1 or 2 months. The credit period will be given by the company. So this credit management plays a major role. Retrieving cash from the debtors is a very challenging task for whatever may be the type of company. So this credit management or receivables management plays a major role, because once if they don't analyze it properly, some of the customers or debtors can become a bad debt for the company. So that in turn affects the working capital cycle. This in turn affects the production. This in turn affects the profitability of the company. So entire thing gets lagged. So that's why this is very, very important for a company point of view. And this is again another important one, dangers of excessive as well as inadequate working capital. So excessive working capital investment in working capital is also not good, as well as inadequate is also not good. For example, if company requires only 20 lakh worth of raw material for that particular month, then instead of investing only 20 lakhs, if they are dumped with 1 crore raw material or 2 crore raw material, that affects the profitability position of the company. So that is this why it is affects the profitability position of the company is like, see, for that particular month, they require only 20 lakhs worth of raw material. Instead of that, suppose if company dumps with 1 crore raw material, 2 crore raw material, the entire thing will be accumulated in the godown or warehouse. So which means they will be using only 20 lakh worth of raw material for the particular month. Remaining 1 crore worth of 1 crore or 2 crore worth of raw material gets stagnated in the godown. So raw material there may be a damage in the raw material if inventory management is not followed properly. And this 1 crore 80 lakhs, if it is invested somewhere in the short-term investment, the company would have got some returns. So here profitability gets affected. That is why excessive investment in working capital affects the profitability of the company. Whereas inadequate working capital, that is inadequate working capital is, suppose if company requires 20 lakhs worth of raw material, but they are purchasing only 10 lakh worth of raw material, what will happen? So again, you can see here the shortage of raw material because of the production cycle gets affected. There may not be sufficient cash to pay to the what you call as a creditors, all these things. So your liquidity gets affected. So excessive working capital investment in working capital or excessive investment in current asset or less investment in current asset, both are not good for the company. Why we call this as current asset is working capital management is nothing but managing the current assets. So in current assets, we need to manage everything. Like we need to manage cash, we need to manage what you call as bills receivable, we need to manage the stocks in three forms: raw material, semi-finished state, as well as the finished state. We need to manage all these things. That is why this working capital is very, very important for a company point of view in order to be successful in the competition. Now, how to calculate this working capital requirement? That is what we'll be seeing now. So now let's check up this problem. Here, the data given in the problem is the performer cost sheet of a company provides the following data. Here, cost per unit is given. You can see here raw material cost per unit 52 rupees, direct labor 19.5. Then overheads 39,000, sorry, 39 rupees. Total cost per unit 110.50. Profit is 19.50. Then selling price is 130. So now this is the data that is given in the problem. Now the following are the additional information given. That is average raw material in stock 1 month. Then average material in process of a month. Credit allowed by supplier 1 month. Credit allowed to debtor 2 months. Time lag in payment of wages 1.5 weeks. Time lag in payment of overheads 1 month. Then cash balance is expected to be 1,20,000. So these are all the data that are given in the problem. You are required to prepare a statement showing working capital needed to finance a level of activity of 70,000 units of output. They are producing 70,000 units of output. You may assume that production is carried out on evenly throughout the year, and wages and overheads accrue similarly. So now these are all the data that are given as far as the working capital is concerned. Now we know that working capital, how to calculate working capital. So working capital formula is calculating working capital. The formula required is current asset minus current liability. So when we calculate, that is when we separate current liability from the current assets, we may be getting the working capital required for the particular company. But from this particular data, what are the things that may be given as a current asset as well as current liability as far as the working capital problem is concerned? Current assets may be given in the form of, for example, it may be given in the form of cash. Next, it may be given in the form of raw material in stock. Then next, it may be given in the form of work in progress. The next, it may be given in the form of the finished goods. Okay, so it may be given in the form of raw material in stock, work in progress in stock, finished work in progress or material in process. Both are same. Work in progress or material in process. So which means semi-finished product. Okay, so it means that finished goods in stock. This is again another important current assets. The next, it may be given either in the name of customers, it may be given, or it may be given in the name of debtors. Okay, so that is again another important what you call it as the current asset that may be given in the working capital requirement problem. Then next, how the current liabilities will be given in this particular problem is current liabilities. So it may be given in the name of, for example, creditors, suppliers or creditors. Or creditors. So that is again a very important current liability. as far as the company is concerned, because all the companies, they depend on creditors or supplier to get the credit period so that they can repay after some period of time. Even though there is a cash shortage in the company, the production should go ahead with the required raw materials. The next important, what you call it as a current liability that may be given in the working capital problem is lag in overheads as well as lag in wages. Okay, so lag means, see, the company may, what do you call it? It's nothing but outstanding wages as well as outstanding overheads. Overheads is other expenses. So company, see, that is again another important source of working capital. So that is our outstanding expenses. This month, the wages or other expenses can be delayed for a month or a week or something like that. So they can use it for what do you call it, a working capital requirement. So lag in wages or lag in overheads. This is again another important current liability that is given in the working capital problems. So now what we can do is, let us first calculate, and before calculating, let us check what are the data given in the problem. Here you can check here only cash is given in the form of rupees, that is in form of rupees. Remaining else or the data is given. So what we need to do is we have to convert all this data in terms of rupees. Then only we can find out the working capital. Before that, we need to identify what are all the current assets that are given in the problem. These are all unit costs given. That is the general information. The next is, from this data, what all the current assets that are given in the problem, what all the, what do you call this, the current liabilities that are given. So raw material in stock. Raw material in stock, I have told you it is a current asset. So let's just, will mention here, here as current assets. The next, average material in process. Again, work in progress. Again, it is a current asset. The next, credit allowed by supplier. The supplier is nothing but the creditor of the company, which means current liability. The next one is credit allowed to debtors. The debtors or customers is a current asset. So here we can mention here as current asset. The next, time lag in payment of wages. So there is outstanding wages. That is nothing but current liability. The next is time lag in payment of overheads. Again, I told you that it's outstanding overhead, that is lag in overhead comes under current liability. So this is the current liability. The next one is cash balance that is expected to be. So cash is nothing but a current asset. So now we have identified what are all the current assets as well as current liabilities given in the problem. So the next will be, we need to work out. And before working out, let us check whether there is any uniformity in the duration given or not. For example, average raw material in stock is given 1 month. Then material in process is given half a month. This is given in months. This is also given in months. Whereas this is given in weeks. This is given in months. Only this thing is, this 1.5 weeks, we have to convert that into months. How we can convert that into months? That is 1.5 weeks should be converted into months. Otherwise, we have to convert the entire thing into months. What we can do is either this we can convert into months or remaining we can convert into weeks. Okay. For example, 1 month normally we call it as 4 weeks. Okay. We can go ahead with that. Okay. 1 month equal to 4 weeks. Half a month equal to 2 weeks. So there should be a uniformity. Everything should be converted into months, or everything should be converted into days, or everything should be converted into weeks. Okay, there should be an uniformity, then only we can go ahead with the calculation. So 1 month equal to again 4 weeks. Then suppose if you find converting this 1.5 weeks into a month, then we can go ahead with calculating what you call it as everything into weeks. For example, we can do this also in months. For example, 1.5 weeks means, for example, for 4 months, just let me give a sample example. For example, 4 weeks. 4 weeks is equal to 1 month. So now, here we have given 1.5 weeks. So which means 1.5 weeks equal to how many months? That is what we need to calculate. If you cross multiply 1.5 into 1 divided by 4. So how much it comes around? 1.5 divided by 4. So it means 0.375 months. So either we can convert this into 0.375 months, or if you are not comfortable in that, we can go ahead with converting what you call as everything into the weeks. We can go ahead with calculating everything into weeks. So now here the next thing is here this 2 months. So now this 2 months we can use as 8 weeks. 2 months means 8 weeks. Then next is this 1.5 weeks is already there. So we can use as it is 1.5 weeks. It is already there 1.5 weeks. Next time lag in payment of overheads. 1 month means 4 weeks. Next, this cash is already given in the form of rupees. So no need to include in our calculations as of now, because there is it's like finally while adding with the current assets, we can use directly. Now this is the data which has to be converted. Now what we can do is we can write down what are all the current assets and we can start converting that into what you call this in the form of rupees. First, I am going to write current assets. Then I will include current liabilities later. Now, the current assets, the first one, as I told, it is nothing but the first data given is average material in stock. That is 1 month is given. So just I'm going to give the heading as average material in stock. That is the first one, the first current asset. The next current asset is, the next current asset given in the problem is average material in process of a month. So just I'm going to calculate the value for average material in process. Then the third one, the third current asset is credit allowed to debtors, 2 months. So the debtor value we are going to calculate credit allowed to debtors. So then the fourth current asset, we check what is the next current asset given in the problem. Here cash. Cash is 1,20,000. That also let me include here cash 1,20,000. Now, if you want to calculate the values, the value of the current assets, now we'll calculate first. What we have to do is the numerator value, which includes the number of output, how many units the company produces, 70,000. So 70,000 multiplied with what is this is a raw material, which means raw material cost per unit we are supposed to use. Raw material cost per unit, how much given in the problem? It is given as 52 rupees. So raw material cost per unit is 52, and that should be multiplied with, see, raw material in stock for how many months or weeks? Raw material in stock for 4 weeks. We have converted everything into weeks, no? So that is equal to 4. So the numerator value should include the number of output in units multiplied with the cost. If it is a raw material cost per unit we need to include multiplied with how many months or weeks it is given. So it is given as 4 weeks. We have converted that 1 month into 4 weeks. So 4, the whole divided by total number of, since it is given in weeks, we have to use the total number of weeks in a year, which means 52. Normally we use 52 number of weeks. Suppose if we are using month data, 1 month straight away, then this becomes a 1 month, and your total number of months in a year is 12. We can go ahead like this. Now, since we are using weeks, we can use 4 divided by 52. Now we need to simplify this one. When you simplify, so let's check what is the value we are getting here. So 70,000 multiplied with 52. 70 multiplied with 52. That should be multiplied with 4. The numerator is values this one. This should be divided with 52. So which means 2,80,000. So the raw material, average raw material cost is rupees 2,80,000. So now we found out the value of raw material is 2,80,000. Now in the similar way, we need to find out the average material in process. What we can do is we can use the same template. Here again, the number of output units we have to mention. Here in material in process, what we are supposed to do is, in material in process, we have to use what you call as the raw material cost per unit plus direct labor per unit and overheads cost per unit. All together we have to add and mention. So now all three together we can add and then we can multiply. So here Instead of here in raw material, we have used only raw material cost per unit. But here we have to just add all the three costs and then we have to multiply. Raw material cost per unit is 52. This is 19.5. This is 39. So 19.5 plus 39. All the three costs we have to add. Then raw material in process for how many weeks? 2 weeks. So instead of 4, I'm going to use 2 weeks divided by 52. So now we need to simplify again. What we can do is, let me add these three values first. Then we can multiply with the remaining values. So it comes around 52 plus 19.5 plus 39. It is 110.5. This should be multiplied with 70,000. And this should be again multiplied with 2. We'll be getting this values 1 crore 54 lakh 70,000. This should be divided with the total number of weeks in a year, 52, which means 2 lakh 97,500 rupees. 2 lakh 97,500. That is the value of average raw material in process. Now let us calculate it. We have just now calculated average material in process. Then what is given is as a current asset is debtors as well as the cash expected to be in the form of 1,20,000. So the one more current asset is debtor. So here the debtor values I have mentioned here already. So the same formula we can use here. So the number of units. But here debtor means the selling price per unit we are supposed to use. So we will remove these three. Selling price per unit. Selling price per unit, how much given? 130. We are supposed to use that 130 here. And that should be multiplied with the debtors, how many weeks? 8 weeks. We have to use that 8 weeks. Divided by the total weeks in a year, 52. Now let us multiply all the three. 70,000 multiplied with 130. That should be multiplied with 8 and that should be divided with 52. It comes around 14 lakh rupees. So the total value comes around rupees 14 lakhs. The debtor value we found out. So now as per this particular problem is concerned, only the current assets available, only 4 current assets are there. That is average material in stock, material in process, then debtors, and cash is already given in the form of cash, rupees. So now we calculated these values. Average material in stock we calculated, average material in process we calculated, then credit allowed to debtors. Debtors value we have calculated. Then the cash is already in the form of rupees. So now we can find out the total current assets value. The total current assets, that is equal to the total current asset value will be, we need to add all the values, 2,80,000 plus 2,97,500 plus 14 lakhs plus the cash which is already given in the form of rupees 1,20,000. That also we need to add. When you add, you will be getting 20,97,500. 20,97,500. That is the total current asset value. Now, the next step will be calculating the current liability value. So now you check in the problem what all the current liabilities that are given here. The current liabilities given are the credit allowed by supplier. The first current liability, let us take that one. The first one is credit allowed by supplier. The second one is, the second current liability is the time lag in payment of wages. We'll take up that one. The second current liability that is given in the problem. Time lag in payment of wages. The next one will be the time lag in payment of overheads. The third current liability. So these are all the 3 current liabilities that are given in the problem. So now let us use the same template which we have used already. We'll use the same. So now How to calculate is, see here, credit allowed by supplier, that is creditors, again number of units multiplied with, see from the supplier what we buy raw material, which means raw material cost per unit, the same 52 we are supposed to use, multiplied with credit allowed by suppliers, how many months or weeks, that is 4 weeks. We have to use that one. 4 weeks I'm going to use here, 4 is already there, divided by total number of weeks in a year. So when you multiply and divide, you will be getting around 70,000 multiplied with 52 multiplied with 4 divided by 52. You'll be getting 2,80,000. So this value is rupees 2,80,000. That is a credit allowed by supplier. Then time lag in payment of wages. So which means the same template we can use here. Now you can see the number of unit is 70,000. Lag in payment of wages. Lag in wages is given to whom? Wages is given to the labor. So which means labor cost, direct labor cost per unit, how much? 19.50. That we are supposed to use, 19.50. Then next is time lag in payment of wages. That is how many months or weeks we have to check here. Time lag in payment of wages is 1.5 weeks, 1.5 weeks. So we have to use 1.5 here, divided by the total weeks in a year. So now let us multiply and divide. So 70,000 multiplied with 19.5. You'll be getting this value, and that should be multiplied with 1.5. And this value should be divided with 52. You'll be getting 39,375 rupees. 39,375 rupees. So that is time lag in payment of wages. 39,375. The next will be, so we have to find out lag in payment of overheads. So we need to find out lag in payment of overheads. The same template we will use here. So what we can do, the number of units is 70,000 and overheads, which means overhead per unit we have to check. So overhead per unit in the problem it is given as 39 rupees. And one more thing is it is 4 weeks lag. So we have to use those data in this particular problem. This is 39 and lag in payment of overhead is 4 weeks. So we have to use. Now when you simplify this one, we will be getting the values of, just we'll check how much the value here is. So that is 70,000 multiplied with 39, and this should be multiplied with 4. This should be divided with 52. 2,10,000. So now all the current liabilities we have added. Now we have to find out the total current liabilities. Total current liability will be, like we need to add all the values, 2,80,000 plus 39,375 plus 2,10,000. So it means 5,29,375 rupees. 5,29,375. That is the total current liability. As per the our formula is concerned, working capital equal to, this is the formula, current asset minus current liability. So we'll use here. So instead of current assets, how much we have calculated as per this particular problem is concerned is the total current asset is this value, 20,97,500. That should be subtracted with the total current liability, this value. So when we subtract these two, how much we are getting here is 20,97,500. That should be subtracted with 5,29,375. Which means 15,68,125. 15,68,125. 125. So now the total working capital required for the company is 15,68,125 rupees as far as this data is concerned. So based on that, the company can forecast their working capital requirement. This is the working capital requirement they have planned. Based on that, they can go with which type of source they want to finance and other things.